Metro Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Good Monday afternoon. Welcome to the COB. I'm Nadine Blaney. It's really nice to be here with you. And guess what? We've just turned mildly positive according to the S&P ASX 200. So that's the CIBO Australia Index. Hey, did you hear that CIBO US is putting CIBO Australia up on the blocks? Interesting side note there. We're still, though, hearing that they're very committed to increasing competition in the listings landscape here in Australia. So all's well that perhaps ends well for the S&P ASX 200. I'll keep an eye on that as we move through this show, this podcast. It's, as I said, nice to be here with you to start the week when we are considering some of the pressure coming through on Westpac's profit. Will that be a hallmark of this bank reporting season? However, I should say that Westpac is one of the best performing companies so far today. Housing, heat, boy, those prices are rising in the wake of a couple of interest rate cuts coming from the Reserve Bank of Australia. I mean, it is just so tough out there for those not already on the property ladder. But the wealth effect must be feeling pretty good for others as well. And of course, that brings us to the big decision tomorrow. So will the RBA keep rates on hold? I was speaking with Justin Fabo from Antipodes Macro a little earlier on today. He says most certainly. Where it'll get more interesting is because the RBA needs to update their forecasts, essentially, with the Statement of Monetary Policy also being released. And Justin was saying, you can catch that interview online, by the way, at ausbiz.com.au. It's the RBA will likely be answering some pretty tough questions as to how their inflation forecasts were so wrong. So we'll be watching out for that. We'll be watching out for where potentially they might see the neutral rate. Of course, never giving us a hard number, but does this change that scenario? And Justin Fabo was also considering whether or not it changes the outlook for the Nauru, so the unemployment rate and full employment and where that sits in the Australian economy. So lots happening tomorrow. There's some sort of a race going on as well, I'm told. But let's get to these sectors of the day today. And we've got, the bank's doing pretty well, CBA, but look at Westpac in the wake of its results, which saw profits down by about 1% on rising costs. Macquarie reports later in the week. Now, when we get to the healthcare space, this is what is really weighing on the market overall. I think it's the worst performing sector, at least it was earlier on. CSL down a further 2%. Market really, its confidence has been shaken in this blue of blue chip stocks, and so selling there, and but negativity right around there, as well as with the big miners. We have seen a bit of pressure coming through on some of those underlying commodities. So we'll keep an eye trained on that. I guess lithium is the exception. Liontown a little earlier on was one of the best performers. Okay, let's get some detail on those top stories, with Westpac's net profit falling slightly on those higher operating costs and the very competitive landscape for loans. Also, Westpac has sold its $21.4 billion RAMS mortgage portfolio to a consortium, which also includes the listed Pepper Money. Its share price was up by 6.5% to $2.38. Droneshield shares were higher to start the session, but really did retreat after it said that it received a $25.3 million contract from a customer in Latin America. Meantime, HealthScope says it has paid all deferred rent for the May to October period. Payments were made to HealthCo Healthcare and Wellness REIT and the unlisted healthcare fund, which is possibly why we're seeing HMC Capital up as well today. We've seen Findi increased its ATM franchise sales over October. Remember, this is a small cap that is very focused on India. And I will also say that Navigator Global has seen its share price in the smaller end of the market rise. Last I checked, about 8%. It had a broker coverage, 8.2% broker coverage from UBS, initiating coverage of Navigator Global with a buy recce. Look, I could go on about some of the corporate news out there and some of the other broker upgrades and downgrades, but instead I'd like to get a little bit of analysis coming from Josh Gilbert, eToro. Josh, nice to see you there. Thanks for joining us. Why are we seeing any signs of enthusiasm here? I know we had a really good start in from the United States, but futures had us pointing to a pretty negative start. So what dynamics have changed?
Yeah, great to be with you, Nadine, as usual. Obviously we had that nice lead in from Wall Street, didn't we, coming from Friday. I think tech earnings, ultimately coming in better than expected. Amazon was that sort of big one that sort of led the market. Obviously, AI, stocks, Nvidia, Palantir continuing to move higher as well. So I think that what's weighing on the local market today, obviously those interest rate sensitive sectors, particularly property stocks, and obviously healthcare there struggling as well. I think that obviously a little bit of positivity expected to come from the Aussie dollar on the fact that we are very likely to see that pause from the RBA, but tech has obviously had a great day as well on the follow-on from that session on Friday. So some big names like Megaport, are pretty decently today as well. So I think we've seen some strength in some sectors, which have maybe outweighed some of the the negativity we've seen in other sectors, and obviously some strength coming from the financial sector with Westpac results, and obviously up higher on the day.
Yeah, back to, I think, though, U.S. reporting season. Amazon was a cracker. I think that's the consensus. Still big spending on AI. We know that. We know that that's what's been driving really this bull rally. What did you make of all of those big tech results? Could you rank them?
Yeah, Amazon, I think you're right, up there as sort of number one, probably bring Alphabet in and as sort of number two. Those are the two key standouts. I think really what we saw from Amazon was a business that sort of showed after question marks over, can it still grow at its sort of scale, and it showed that it absolutely can continue to execute at that sort of scale, and really hushed a lot of lingering doubts as well. It was more of I think it was a masterclass of execution at scale, right? With the AWS at the size that it is, revenue up at 180 billion, sort of the key parts of the business, firing on all cylinders. AWS running at a run rate of over $130 billion now as well, and obviously showing efficiency coming from AI, with obviously that cutback in corporate jobs as well, announced sort of just before. Also, operating income also rising better than expected for AWS. And then Alphabet, that was a name that I think did stand out to me, ultimately because, again, it said it was increasing spending, but ultimately it's doing it because it's got a huge backlog of demand. Cloud backlog was up at about 150 billion, gives you that clear view of sustained demand into next year. That capex getting close to about 100 billion for the full year. Apple was a little bit disappointing. Nothing really this quarter that did enough to sort of get Wall Street too excited. The positive that came from Apple was that its guidance, into next quarter said that expects to see double-digit growth next quarter, coming from obviously that new iPhone launch. But again, still a lack of insight into that AI strategy, that AI integration into those sort of hardware products, which is ultimately the key driver for the business. So that was a bit of a disappointment, really. Meta obviously fell. Again, not necessarily from a fundamental perspective, but obviously a huge tax charge in the quarter that smashed earnings. But I think Apple was one, although the market reacted positively to the results, it's still one that I think is lagging behind big tech, especially when it comes to AI. And I think if it doesn't sort of catch up soon, then we will continue to see those other Mag 7 names pull away a little bit, and Apple will sort of struggle, I think, until they can really give us a clearer roadmap of what that AI strategy looks like.
Mm-hmm. Okay, so what are we looking forward to this week in the US? Because inevitably it helps dictate what happens here.
Absolutely, yeah. A couple of really big names coming through. Again, it's sort of AI. We've got Palantir reporting earnings overnight in the US. That's obviously one of the market darlings of this sort of AI trade, alongside Nvidia, one of the best performing stocks this year, and I think it was the best performing stock on the S&P 500 last year as well. Really solid Q2 performance, guided for about 50% growth this quarter as well, which was obviously absolutely massive, and that sort of growth is being fueled by the expanding use cases of its AIP platform. We're seeing commercial demand accelerate. On the other side of that, there's question marks around Palantir, around the reliance on sort of US businesses, government contracts. Obviously, it's proved very lucrative. We've seen that so far, and it's basically bringing into question its valuation. That valuation is super rich. Its price to sales ratio is massive, and I think that's probably one of the stocks in this sort of AI boom that has a lot of people maybe scratching their head. It's still a company that maybe not a lot of people know what they do, but it is in that beautiful place of defense and AI, two of the key structural themes that we've seen markets really get around over the last year. It's one of the most held stocks on the eToro platform here in Australia. It's the 10th most owned stock, so outside of those Mag 7 names, one that is really liked. That's a big one we're looking at, and then obviously AMD as well. That comes on Wednesday morning, I think, Australian time. So again, has lagged behind Nvidia, and then maybe has been a quiet competitor to Nvidia, but it's been enjoying a bit of a strong run this year. Shares up over 100%. Obviously recently announcing that deal with OpenAI, which has obviously been massive, expected to generate tens of billions in annual revenue there as well. So again, the sort of the problem there, or not the problem, but the hurdle that I think it has is, any hint of uncertainty around guidance. If we're not quite seeing it deliver, it's obviously had a huge year so far. Any slip, I think, would sort of put the stock on the back foot a little bit. Combine that with obviously that sort of US and China trade standoff, which we didn't get anywhere from a tech perspective with that. There are risks sort of heading in, but of course we've seen those AI companies continue to deliver so far, monetization front and center. So I think you'd be more positive than negative going into those results.
So this week here locally, we do have the banks reporting, save for CBA. We also get still a number of AGMs coming through, which are almost like mini updates in many cases. They're calling it the mini reporting season, although we feel like we give that tag to a few different, times around the place. So we've also got some investor days being held. CSL is holding its Capital Markets Day. What do you think will really be driving sentiment here locally this week?
It's always good to get those updates, right, from AGMs and from those investor days. CSL will be a massive one to obviously keep an eye on us. Obviously after those earnings and that terrible day that it had last week, after sort of saying it was calling off that Securus spin-off, that will be a name that we watch closely, given how much the stock has struggled in recent times. And those AGMs are always a good look into the hood outside of reporting season. It almost feels like, yes, we only get 2 reporting seasons a year, but we do get those sort of confessions and those updates, throughout the year anyway. Of course, we don't get those quarterly updates that we tend to do from the US. And of course, the RBA decision tomorrow is obviously going to be a big one. Ultimately, we're not probably focusing on the actual decision itself. We know that that's pretty much guaranteed to sort of be a hold after that inflation report last week. But, it will be that, those inflation expectations that are going to be updated, because obviously far more dovish, I think, than what we're getting from those inflation numbers at the moment. And of course, I think you mentioned it at the top of the episode. We'd probably like to see a bit of a grilling coming for Michele Bullock, and maybe rightly so, right? Given that those inflation expectations clearly aren't anywhere near where they should be. And again, markets are very much pushing back on those expectations of rate cuts. So if she takes that hawkish tone a little bit, we will see those rate sensitive sectors coming under pressure this week. And obviously any of those companies reporting updates will be heavily in the limelight.
All right. Well, Josh, you've set us up nicely. Thanks for joining us on this Monday afternoon. Appreciate it.
Thanks, Nadine. Have a great week.
Josh Gilbert there joining us from eToro. And the stock of the day, drum roll please, Westpac. Experts being Nathan Samasundaram from Deep Data Analytics and Zach Riaz from Banyan Tree Investments.
The banks are trading near all-time high. They're paying you less than 4% yield. So you're buying a growth stock? No. You're buying a yield stock? No. You buying pain? Yes. So if you're there for a long time. Tax, you're never going to sell. That's fine. If you're buying fresh, I think you're buying probably the peak. Time will prove that. Unless if you think that we can afford to get a property market another 20% in the next 12 months. Look, it can be done. Who knows? But unless property market's going to run again hard, the banks are not doing that well.
Look, we're neutral on it. Echo a lot of what Nathan said, and really, it's really got to be something around positive catalyst. The cost base, that's just too big of a cost base to move around or anytime soon. Again, my earlier point, these guys are now starting to do the technology spend, which CBA did ages ago, and I think the recent update today was also suggesting that there's going to be a bit of an uplift in that technology led. The bright spot, really honestly, is just it's boring, it's benign sort of a period in terms of bad and doubtful debts cycle. That could change obviously, and the capital ratio is well above what's required. That gives them $3 billion or there of excess capital that can potentially, blackmail investors into staying there.
There you go. If you're listening to this in podcast form or on catch up, you can get the whole analysis for that stock of the day online at ausbiz.com.au. Let's take a look at some of the leaders today. Megaport, to Josh Gilbert's point, up by 7.35% to $17.60. I mentioned HMC Capital doing really well today. Catalyst Metals, Champion Iron, and Life 360 at $51.19 a piece. Those that are not performing well, Linus down by 8.25%. Steadfast, a bit of consternation over CEO behavior. Guzman and Gomez, PLS, and Iluka Resources. Iluka finishing at $6.33, down close to 5%. Small to mid-cap space of the market. Well, not sure what's going on with that one up at the top. That's a big jump, though. Lumos Diagnostics up by 17%, which seems a bit more normal, to 24 cents per share. Let's get a look at what's happening on the flip side. European Lithium, for one, down by 11%, or 10.5, let's call it that, to 24 cents per share as well. Tonight, we get PMIs coming from Europe. We get the ISM manufacturing in the US, which people will be paying a lot of attention to, particularly because we're not getting a lot of other data because that government shutdown continues to keep on keeping on. All right, to end tomorrow here, the big one is the RBA rates decision. So 2:30 we'll have extensive coverage for you. Also the statement of monetary policy, so we'll get some insight into where they are now thinking inflation and unemployment will head in the coming months. Here's a little look-see at our market. The CBO Australia finished just in negative territory, while the S&P ASX 200 is up at 8,894, small gain of 0.15%, so less than 0.2%. E-minis in New York are looking good, S&P 500 and NASDAQ E-minis. And we'll see what's going on in the European session. We'll have some results to digest by tomorrow morning. And of course, we're looking for any kind of updates coming through when it comes to OPEC Plus. It has paused its oil output hikes beyond December, so we'll be watching oil. And the US dollar as well. It's near a 3-month high as we wrap this edition of the COB Monday, the 3rd of November. I'm Nadine Blaney. We look forward to seeing you here tomorrow.